How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for October 10, 2017. Here's the report that I posted in the community, and here's a snapshot of the positions of the hedge funds and the institutions and banks for the currency pairs and for some futures contracts. Okay. Alright, so let's take a look at what the institutions have been doing with their positions. So starting off with gold, we saw really big highs of 351,000 here, so very aggressive at the peak here, okay, very aggressive, and then there's been a decline ever since, which makes complete sense, right? 1, 2, 3, 4 straight weeks of declining. Obviously, your closing off longs causes price to drop. Alright, closing off longs for profit taking as price drops. And then we get the test of the monthly demand that we've been waiting for. And take a look. Short positions completely cooled off in blue territory, meaning they are not aggressive at all with their shorts, not even in a neutral position with their shorts right now. They're completely cooled off. And if you take a look at what their 3-month average on shorts are, it's 99,000. We're at 79,000, nicely below. And we're just sitting below average size for longs. So we're still aggressive with longs, very cooled off with shorts. And now we see strong demand being filled. So this is the area where I'd like to get in long on gold. So if we get a nice retrace back to this weekly bullish engulfing area, this is the area that I'd like to get in long, because now we've just confirmed that there is demand being filled in by the institutions. We knew that there was about 30K of long positions last time price was here being filled, 30,000, and now that the rest of that demand is being filled in by this big tall green candle, weekly bullish engulf, waiting for price to retrace. And we're good to go for longs as far as I see it. Okay, so oil, let's take a look. So 698, 687, 685, a slight decrease in longs, but shorts are also increasing and starting to become aggressive. And that happens as price drops here. Makes sense, right? They're hedging. So price hits a weekly supply area. Okay, it drops. As it drops, they add shorts. Why? So they get a better price on their overall longs. Alright, so price drops, they add shorts, they close their shorts down here, and probably next week we're going to see them adding more longs again, and now we're getting the big bullish candle to the upside. So I'm looking to get in long on this one as well. Lower in the charts. Yeah, I would have preferred for it to have gotten in here. So where we are now, it's a bad place to get in long because anything can happen right now. I'm waiting for this to break, these highs to break to get in long, or I'm waiting for price to drop down here. Ideally, I'd love for price to drop down here, but I'm not sure if that's going to happen with oil. Okay. Another thing to point out here is the coloration of these cells here went back into a slightly more neutral feeling, okay, which is a good sign. It's telling us calm down, don't be looking to get in long right now, let things play out. It's not an ideal situation on oil right now, so that's what I'm going to do. US dollar, so with the US dollar we see that they decreased longs from 31,000 to 29,000, and shorts remain aggressive, but they did close off almost about 2,000 positions. Alright, coloration of the cells are still red, so bearish bias is still intact. And net positions is a negative 3.6 thousand. So it's not huge, right? This isn't huge numbers that we're talking about here, but there is a short bias. I'm waiting on this one because we got the weekly 20 EMA in control. We have a weekly supply that's been taken out. We got a weekly demand sitting right below price. So we're right between a rock and a hard place, right? We got the weekly 20 EMA and a weekly demand zone. So anything can happen in these areas. So it's not good. It's not a good place to get in. If you want to get in short, this is definitely not the place to get in. I'd get in short over here with the monthly 20 EMA and a beautiful weekly supply zone. I'd get in short there, or wait for this area to break and then get in short. Maybe after testing this area here, get in on the zone that causes that removal and then drop. But right now's not a good time. We're swimming in the middle of the ocean. We can go any direction. So waiting on that one. Aussie US dollar. So longs decrease. They hold the aggressive stature but decrease quite substantially, right, over the last couple of weeks. We used to be 103,000 long positions to 98 and to 93, but that makes sense as price declines, right? It declines from a weekly supply zone, so they were closing off longs, taking off some profits. You know, they got in some here with 14,000 positions, rallies up, close some for profit taking, let price drop, and it's down here we're starting to see the demand kicking in again, right? We got a weekly bullish engulfing here being created, so next week's report should probably show us that long demand being kicked in. And I think we also got the monthly 20 EMA right here as support with the monthly uptrend. So I'm looking to get in long. I'm looking for new areas of daily demand to be created so I can get into this position. I would have preferred for price to be reacting down here, but like I said, we are reacting from a monthly 20 EMA. So for me, it's all upside from here. Just looking for new areas to get in. All right. Bias is clearly long here. 79% of their overall exposure is geared to the long side, and net positions are still very high, positive 69,000. So looking to get in long, just waiting for new areas of demand to be created. US CAD. This one's a tricky one because we're sitting within a weekly 20 or a weekly supply zone, but the supply zone never made a 2-to-1 move away, so it is low quality, so it could break and price could essentially go higher. We are sitting within a 3-month area of demand, so we shouldn't forget that. It was tested once, second test, big pin candle, and we can get a bigger retracement to the upside for sure. Only thing is that shorts are heavily aggressive, right? And the bias here is definitely bearish. 82% of their overall exposure is geared to the short side, and also, you know, negative 76,000 positions. So it's definitely downwards that the institutions are positioned. But again, it's almost like the US dollar. With the US dollar, weekly supply was taken out. In this case, it wasn't, but weekly 20 EMA is in control, but we got a weekly demand zone right here. So like in the middle of the ocean, it's not good to go short anywhere. So watching this one, but not taking any trades as of yet. US Swiss franc, longs increase, shorts increase. Shorts are becoming a little bit more aggressive than they have been in the past, sitting way above average. Average is 14.3. We're at 18, so it's good signs for shorts. Although I'd prefer to see shorts here at this the supply zone here on the monthly. I think that would be a good area to get in short if you wanted to get in short on this pair, considering this trend line's just been broken too. So higher up on the chart, which supports the fact that the US dollar can definitely move higher, which also supports the fact that the US CAD can definitely move a little bit higher. And when we're going to take a look at the US dollar yen, it also looks like it can go higher. So let's move on to the euro. What do we see with the euro? We see that longs have increased. We used to be at 183, then 187, now 195,000 positions long. 97,000 positions short, but cooled off, sitting below average. Longs above average, and long exposure jumps up 1 point to 67%, and net positions increase by about 8,000 to 98,000 positions to the positive side. All right. We're reacting from a weekly area of supply, did not drop 2-to-1. We also got the weekly 20 EMA here. So, you know, if you're looking for the best sign for what the institutions are thinking is going to happen in the markets, you have to look at gold, you have to look at the Aussie, okay, and you look at the euro. All right, they're heavily long biased euro. The Aussie has nothing but upwards to go, right here, reacting to the upside, nowhere else but upwards to go, very clear skies. And you look at gold, heavily long biased, very heavily long biased, reacting to demand, Although it's not the greatest area of demand, we're getting confirmation that it wants to go up. All right, so gold wants up, oil wants up, US dollar we don't know, Aussie wants up, US CAD we don't know, Swiss franc we don't know, euro wants up, pound wants up. All right, so when looking at all these pairs, it's very clear that the institutions want gold to go up. If gold goes up, what happens with the US dollar? It drops, right? Typically. So if it drops, then US CAD most likely will drop. Then most likely a US yen will drop as well. So let's take a look at the pound. So pound, you know, they're very aggressive still. 79,000 positions long versus 64 short. So slight bullish bias, but look at the coloration of the cells, very green. And net positions positive 15,000. So we got a rally up, a move downwards, reacting from the monthly bullish engulfing. The weekly 20 EMAs right here. I wanted to get in long here at this demand zone. It fell short, reacting to 20 EMA. So you got to be very careful here getting in long, because it could turn and just head further down. Yeah, it's an ugly chart, right? It's a very ugly chart. If you look at the daily, it's nothing special. We're reacting to some daily demand right now. Did not move higher. So we could definitely see a drop further down. It could definitely happen. All right, will it happen? I'm not sure, but for me to feel comfortable taking trades long, I'll have to see this zone be taken out, or confirmation trades off of this area down here. All right, that's what I'll be waiting for. Alright, so let's go to the next one, US dollar Japanese yen. This one's been a real pain in the butt, you know, so we're reacting from weekly supply, trend line as well, confluence. We got the weekly bearish engulf created, so it should want to drop down like this. But longs are aggressive. Longs have been increasing the last few weeks, right? Which gives us this push upwards. So I think we're looking at this downward candle here. The downward candle shows us that we were aggressive with shorts, then they took off shorts as price dropped. So price could stall here and head higher. That could definitely happen. Longs are aggressive, shorts are getting out of aggressive territory. So it's hard to say what's going to happen here. If you take a look at the long exposure, 75%. If you take a look at the net positions, 101,000. So that's the strange thing about the US dollar yen, is that, you know, it's not really supporting the fact that, you know, we're expecting US dollar to drop, right? Because if we were expecting US dollar to drop, it would be really heavy on this pair, and we'd want to see these numbers here being aggressive rather than here, right? So that's why I'm just watching and waiting right now. I'm not looking to open up any positions on this, because it's just it'd be totally gambling at this point. And the Kiwi, so let's see, Kiwi longs are cooled off. Longs are cooled off. Same with shorts, but shorts seem to be more cooled off. Long exposure 58%, dropped from 62, and net positions positive 5,000, but the trend seems to be this getting lower. You see, 34,000s, 24, 14, 12, 6, 8, 5. So long exposure, just getting less and less and less. You know, look at these numbers here to this. We're in neutral territory right now. Neutral. I think there's a very good chance that we see a big explosive move to the upside here, because we are reacting to a monthly area of demand. Okay, it's not the greatest area of demand. I'll tell you why. Okay, so analyze this chart. Boo boo boo. So add a previous trend line here. Yeah. Hardly broke this area. Hardly broke it. But technically it did, right? So let me see. Yeah, technically it did. So this was a zone, broke it. This is demand. Now we can get definitely a price movement to the upside. Falling short of hitting the zone, so definitely price can go upwards from here. So, but right now the coloration of the cells are neutral, so it's telling me not to do anything. So that's what I'm going to do. I'm going to do nothing. Alright, so that's pretty much it. Volatility, nothing of interest coming out this week, so I am not planning for any major volatility this week. But I am waiting for, you know, confirmation. I'm waiting for certain setups to happen on these pairs, and that is pretty much it for this week. So I hope you guys trade well, and we'll see you next week.